The S&P 500 is trading at 75.75, up 0.42% today, in a market where mixed signals are dominating the landscape. This neutral regime, characterized by indecision, is where the next catalyst will be key, and investors should watch Fed speakers, CPI data, and earnings revisions closely. The current price action is a testament to the breakdown of correlations between assets, making individual analysis more crucial than macro calls. In this context, it's essential to understand the broader macro environment we're operating in. The VIX, a measure of market volatility, is at 15.03, down 5.11% today, indicating a slight decrease in investor anxiety. Meanwhile, the 10-year yield has risen to 4.569%, up 0.66% today, signaling a potential increase in inflation and growth concerns. The dollar index, DXY, is at 101.126, up 0.17% today, which could impact forex markets and commodity prices. With gold down 1.25% at 4,062.1 and oil up 4.05% at 74.3, it's clear that investors are navigating a complex web of market signals. Let's take a closer look at PLBL, the top gainer today, which surged 26.48% to $8.12. This significant move can be attributed to its strong relative strength, outperforming most of its peer group. The upcoming FOMC meeting on July 29th, in about 15 days, is a medium-impact catalyst that could affect PLBL's valuation, especially considering its growth stock characteristics. Higher rates could lead to a higher discount rate, potentially lowering equity valuations. In the context of its sector, PLBL's move is notable, especially when compared to its peers. For instance, while PLBL gained 26.48%, other stocks in its peer group may not have performed as strongly, making PLBL's move stand out. The technical picture for PLBL also looks promising, with its RSI level indicating a potential overbought condition, but its one-month trend is clearly upward. Investors should watch for specific catalysts or levels that could confirm or invalidate PLBL's current thesis. Moving to the second top mover, EQPT, which gained 16.56% to $18.65, we see a different story. EQPT's move can be attributed to its strong earnings track record, with 2 out of 2 quarters beating expectations, and its last surprise being plus 17.6%. The options market is also bullish on EQPT, with a put/call ratio of 0.16, indicating institutional positioning is skewed towards calls. This, combined with a strong buy consensus from Wall Street analysts, 70.6% of whom recommend a buy, suggests that EQPT has significant upside potential. However, it's essential to consider the risks, including the potential for broad market reversal and a high PE ratio of 207.2, which could make EQPT more volatile. In comparison to its peers, EQPT's move is part of a larger trend in its sector, where certain stocks are outperforming due to their growth potential and strong earnings. The cross-asset signals are also providing valuable insights into the current market regime. Bitcoin's price at $63,756.22, down 0.03% today, and its trend suggests that crypto momentum may be slowing, which could impact risk appetite. Gold's price, down 1.25% today, indicates decreasing safe haven demand, potentially signaling a risk-on environment. The 10-year Treasury yield, up 0.66% today, implies that inflation and growth concerns are rising, which could affect equity valuations. The correlation between assets, such as the relationship between PLBL stock price and the VIX, or PLBL and oil prices, provides additional insights into the market's dynamics. For instance, while PLBL stock rose 26.48%, the VIX fell 5.11%, and oil rose 4.05%, indicating a potential shift in investor sentiment towards riskier assets. In terms of sector rotation, the best-performing sector ETF today was materials, up 1.25%, followed by communication, up 1.02%. This rotation suggests that investors are moving towards sectors that are more closely tied to economic growth and recovery. The supply chain ripple effects of today's moves are also worth considering. For PLBL, its upstream suppliers and downstream customers will be impacted by its significant gain. Investors should watch for potential beneficiaries and those who might be squeezed by this move. An ETF that provides diversified exposure to this theme, such as the Materials ETF, could be an attractive option for investors looking to capitalize on this trend. Before we proceed to the action plan, let's examine the 3 assets that are getting the most attention in markets right now. PLBL, as mentioned, is up 26.48% to $8.12, driven by its strong relative strength and upcoming catalysts. EQPT is up 16.56% to $18.65, driven by its earnings track record and bullish options market. YLM, another top gainer, is up 12.99% to $16.61, driven by its sector rotation and macro catalysts. Each of these assets presents a unique opportunity and risk profile that investors should carefully consider. The next part of our analysis will delve into the forecast, providing viewers with actionable predictions and key price levels to watch, as well as an action plan tailored to different investor types, from aggressive to conservative. This will include specific trade ideas, risk management strategies, and tools to help investors navigate the current market regime. Now let's zoom out to the bigger cross-asset picture, where we can see how different markets are interacting with each other. The price of Bitcoin is currently at $63,756.22, with a slight decline of 0.03% today. This subtle move in the cryptocurrency space may seem insignificant, but holds importance in understanding the broader risk appetite of investors. When we look at the gold market, we see a more pronounced move, with gold falling by 1.25% to $4,062.10. This decline in gold prices, often considered a safe haven asset, suggests that investors are currently favoring riskier assets, indicating a risk-on sentiment in the market. The oil market is also providing an interesting signal, with oil prices surging 4.05% to $74.30. This increase in oil prices can be seen as a growth signal, as higher oil prices often reflect stronger demand and, by extension, a healthier economy. However, it's also important to consider the potential inflationary implications of rising oil prices. The 10-year Treasury yield has risen to 4.569%, which can be interpreted as a sign of growth and inflation concerns. This yield curve dynamic is crucial for equity valuations, as higher yields can make future earnings less valuable, potentially impacting stock prices. Moving on to the cross-asset correlations, we notice some interesting relationships. For instance, the strong performance of PLBL, with a 26.48% gain, is moving in tandem with a rise in oil prices, as indicated by the correlation with oil. This suggests that PLBL's performance is partly driven by the same factors influencing oil prices, such as global demand and geopolitical events. On the other hand, PLBL's move is inversely correlated with the decline in silver prices, as shown by the silver correlation. Understanding these cross-asset relationships can provide valuable insights into the underlying drivers of market movements and help investors make more informed decisions. Now, let's examine the sector rotation and supply chain dynamics. Today's best-performing sector ETFs include Materials, XLB, with a 1.25% gain, and Communication, XLC, with a 1.02% increase. These sector moves indicate where money is flowing and can help identify emerging trends. The supply chain for our featured stock, PLBL, involves both upstream suppliers and downstream customers. For instance, if PLBL is a component supplier, its performance could be influenced by the demand from its downstream customers. Conversely, if PLBL is a consumer of certain materials or services, its supplier's performance could impact its own operations. Understanding these supply chain dynamics is essential for anticipating potential bottlenecks or areas of growth. Looking ahead, our forecast for the next 2 to 4 weeks includes 3 scenarios. A bull case with a 40% probability, where the S&P 500 could reach $7,954 to $8,181, driven by a dovish Fed surprise or strong earnings reports. A base case with a 45% probability, where the S&P 500 stabilizes around $7,424 to $7,803, as markets digest recent news and await further catalysts. And a bear case with a 25% probability, where the S&P 500 falls to $6,818 to $7,121 due to hot inflation prints or earnings. Disappointments. Key support and resistance levels for the S&P 500 are $7,197 and $7,954, respectively. Before we get to the action plan, let's take a quick look at the top 3 movers today. PLBL leads with a 26.48% gain, followed by EQPT with a 16.56% increase, and then ALM with a 12.99% rise. For PLBL, this significant move upwards could be an opportunity for investors who have been watching the stock, but it also poses risks if the momentum reverses. EQPT's strong performance may attract investors looking for growth, but it's crucial to assess the stock's valuation and growth prospects. ALM's move, while substantial, should be considered in the context of its sector and the broader market trends. For our action plan, we have 3 specific recommendations tailored to different investor types. For the aggressive investor, considering a long position in PLBL could be a strategy, given its strong momentum and potential for further growth. However, this comes with a higher risk of volatility and potential downturns. For the moderate investor, a diversified approach, such as investing in a sector ETF like XLK or XLC, could provide a balanced exposure to growth sectors while minimizing individual stock risk. For the conservative investor, focusing on capital preservation and considering dividend-paying stocks or bonds could be more appropriate, given the current market uncertainty. In terms of tools, investors can utilize platforms like TradingView for technical analysis or services like Betterment for a more automated investment approach. It's also beneficial to stay informed through financial news platforms and consider seeking advice from a financial advisor. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.